Back now with Inside the Issues, where we are talking about changes in tax law and what it will mean for you and your fellow Southern Californians this year. Joining us now with some observations and some advice, two local experts in these matters, David Rae, president of DRM Wealth Management in West Hollywood, and Selwyn Gerber, founding partner of Gerber and Company in Century City. It's great to have you both here.
Thanks for having us.
Great to be here. Thank you,
I'm going to out everybody because I've been asking all of our guests, and just to make everyone feel better, neither of you have officially filed all of your tax returns yet, have you?
True, but I've paid my taxes. I've got it to my CPA. We've run the corporate returns. We just haven't finally filed them.
Yes.
Well, what people don't always know, Alex, is an extension to file is not an extension to pay. So we all, we all need to pay our taxes, and of course, with the 1099s coming in, partnership returns, and so on, anyone who has any kind of complex investing, April 15th is a pretty tough deadline these days.
Yeah, absolutely. And then there's all of these changes to add on top of it. David, what have you been hearing this year?
I've been talking to a lot of people. It's tax season, so people are confused.
Yeah.
Onwards up to pissed. I've been talking to a lot of people who heard about this big tax refund they were supposed to be getting, big, lower taxes, all these big tax cuts, and they're paying more. They're not getting their refunds, and they are upset. Now, just because you're not getting a tax refund doesn't mean you're paying more taxes, but the people I'm working with here in LA, if you're a homeowner, if you're making a good income, you're probably getting a bit screwed by this tax return from Mr. Trump.
Now, you said, because you said something really important in there, just because you're not getting a bigger refund doesn't necessarily mean you are paying more taxes. So when you want to explain, because I think for some people, we just psychologically have different attachments to different monies and the way that they come and go.
Correct. I think it's a great mistake to look for big refunds. In fact, if you think about it, the big refund is evidence of poor tax planning. And so the goal is to have no refund. Why on earth would you want to give the government a free loan?
Right.
So our goal, obviously, is no refunds and planning accordingly, and that's why I brought you a gift, which you can see, you can certainly read. It's one of the things we say, which is surprises are for birthdays, not for tax time.
Yes.
Which is one of our favorite quotes. And I brought you this coffee mug as a souvenir, Alex. So
and you cannot write that off as a deduction. That's about as far as my tax knowledge goes. But I appreciate the gift all the same. So and I think, yeah, go ahead.
So it's all about planning.
Yes.
It truly is, and that's just one evidence of it. Is the refunds are not a good idea. They're something that really is, as I said, evidence of bad planning. Yeah. What you really want to do is throughout the year, and that's what people should be doing right now, is doing the planning so that they don't have either a large amount owing, which could result in penalties, or a large refund, which is wasted money that's been sitting with Uncle Sam and your franchise tax board people.
And I do want to talk, as we kind of move along this conversation, I do want to talk about what more people can be doing now so that this time next year things feel a little bit less painful. But let's look back, shall we, David? What should have people been doing maybe that could have avoided some of the pain they're feeling right now? Yeah,
you want to do some proactive tax planning. You want to look ahead. So last year, ideally, you would have sat down this time, or when the new tax law went into effect, you would have looked at, what does this mean for me? So you don't go file your taxes now and go, oh my God, I owe 10, 20, 30, $100,000 or more taxes under this, or all of a sudden getting to April 15th and going, I'm used to a big refund that I was going to use to pay off my credit cards or use to take a vacation, and all of a sudden you're owing a lot more money than you expected, and you're now in a hole. So you want to be proactive and look ahead to ways to keep more of your money, because you work hard for it. You don't want to give it to the government.
Yeah. And how much about this, Selwyn, is about this state and local tax deduction? It seems like that's one of the big ones that we're hearing when it comes to Southern Californians.
Yeah, it's a very big one, as you said in one of your previous interviews on this on the show today. You basically, we lost that deduction. It seems to be quite politically oriented. And for many people, living in California is much more expensive than it was. There's nothing you can do about it, though, unfortunately, other than moving out. It's certainly not within the area of what we would call planning. And you're stuck with what you're stuck with. But to be specific on the question you asked is, what could people have done and what should they be doing? What they could have done is try to bunch up their deductions. Because, for example, charity. There are ways that you can take charity in a bunched up way. You can take 2 or 3 years of charity and take that in a way that it could push you to a level where you could actually get a benefit. A lot of people will get no benefits if they spread all of their expenses out. And so itemized deductions that could be bunched up, and philanthropic giving is a great example of where you say, well, what are we going to be giving over the next 2, 3, 4 years? Then let's set up what's called a donor-advised fund. All the brokerage houses offer it, most of the philanthropies. There are community foundations that offer that, and that is a great way to bunch up your expenses. One of the other things that it does, and this is one of the other proactive ideas, is it enables you to gift appreciated securities. If you have any stocks in your portfolio or any other assets that have appreciated, it's a great thing to do to give them away, get a full tax deduction for the market value, regardless of cost or basis. And then if you like the investment, you can replace it. So bunching up is one of the things that could have been done for 2018 and ought to be considered for 2019.
And that's mostly when you're talking about financial donations. What about we're living in this current era of Marie Kondo? If it's not sparking joy, kiss it, say goodbye to it. Is that, David, is there some smart tax strategies here as well?
Absolutely. On the tax form, there's a box you check if you're going to donate more than $500 in non-cash items. Yeah. There's an app called It's Deductible. So if you're going to charity and you're going to give away bags and bags of stuff, I mean, if you've watched Marie Kondo, people are giving away probably thousands of dollars worth of stuff. Yeah. And if you want to get more of a tax break than the $500 there, if you use the It's Deductible app, you can enter all of the items that you're donating. It'll total it for you and give you a nice receipt that you can pair with the receipt you get from the charity that you donated. And maybe you'll be able to deduct several $1,000s, which is going to be hopefully offsetting some of these higher taxes you're paying from losing the SALT deduction or being capped by that, which is, by the way, a $300 billion in lost tax deductions across the country.
Yeah.
And if you look at our real estate values and our incomes here in California, a large percentage of that is going to be Californians who maybe own a house or make more than, say, $175,000 a year, give or take, are going to hit that cap on the SALT deduction. So millions and billions of deductions here in California.
And a lot of that applies to some of the wealthiest Californians. But David, I know you wrote a piece about the tax laws and the changes for Forbes, and you made the point that this will not only hit the richest of Californians. Explain.
No, I mean, if you're talking $10,000 in state and local taxes, that's a $500,000 home, give or take, if you have money to pay for it.
Yeah.
So I'm assuming if you live in a home, you're paying for it and you have a job. So it's not exactly millionaires and billionaires. I think across the country, a $500,000 house might seem expensive. But if you look around here in LA, that's not some mansion in Beverly Hills living next to
it's an apartment the size, a condo the size of this table.
It really is. And there are a lot of people at very low incomes or very average or below average incomes that are owning these homes across the state. There's maybe people who bought 30 or 40 years ago, but they still own the house and now it's worth $1 million. Well, they need to have money to pay their bills. They need to have money to deduct so they can stay in the house and all of those things. But it is a big issue, and it is affecting, I think, the average Californian, let's put it that way.
Let's look at some very practical advice. So when, let's say you still haven't gone to file your taxes, remind our viewers, like, what should they bring with them when they file, and what should they start doing right now, today? Don't delay to make things easier come this time next year.
Right. Well, what you should bring to your tax preparer, and hopefully your tax preparer has given you a checklist of items and matters to be brought, and also things to think about and consider that you might not even be aware of. So a good organizer, we call that an organizer, and if any of your viewers would like one, they could certainly email me and I'd be happy to send them one, sg@gerberco.com.
Fantastic.
Very happy to do that. And the organizer will basically organize your life financially for you, telling you what to bring. If you've been with the same tax preparer for more than 1 year, you get it completed with last year's information, so at least you can get a reminder of what it ought to be or roughly what it was. And that's really, I think, the best way to go, because you're not even thinking about everything. As you said earlier, you know, the gifts, the non-cash gifts that you've given, you need to be reminded of those. There need to be places to put them down and so on. So what you need to take with your advisor, with you to your tax advisor, is all of that stuff. It means W-2s, 1099s, K-1s, 1098s, you know, all the forms you get from your various investments, and salary and independent contractors. So all of those things are required. In terms of what you should be doing now, well, we very much encourage people to fund their retirement plans as early as possible. Because obviously, if you get the money working for you, you know, 10 months or 11 months or 12 months ahead of everybody else, you've got 12 months more of earnings that's going to be in a tax-deferred environment. And that makes quite a big difference if you look at the analysis. So that's something you could do right now. And then adjust your withholdings. That's something that you should do periodically throughout the year, so that, as I said, the goal is neither have too much nor too little withheld. Those are, I would say, pretty basic things that ought to be done by everybody.
But as we heard earlier, David, you used the word pissed. People are angry. This is, even though this is a logical system, there are a whole lot of emotions and politics wrapped up in it. So when people have been talking to you and just their heads exploding, what do you say in return to try to calm them down a little bit?
I usually frame it, I'd much rather be doing so well and be so successful that I owe a ton in taxes and we're going to do our best to minimize what you're paying on that, than the opposite, and you owing no taxes because you're, let's just say, broke or not making any money or not as successful. So I try and pair it that way. And then also kind of on the debate, should you live in California or not? Would you rather pay the high cost of living here in California and live in California? Or would you rather live in Alaska during the winter, and that's a no tax, income tax state? But I don't think we'd have a lot of people. It's Alaska in the winter, and I don't think we're going to lose a lot of Californians to Alaska. I'm sure there's people coming and going, but all the same, I think it's worth living here in California. I was born and raised, and I plan on living here forever. But who knows? Things may change.
Yeah. Well, David Rae and Selwyn Gerber, it has been my pleasure talking to you both. Thank you so much. And heed their word, folks. Next year, may it be less painful for us all.